The top 4 business growth priorities: increasing number of businesses in significant financial distress, and late payment could hinder business growth plans. All of this in the latest Business Finance Bulletin. As each week goes by, more and more business owners are saying they're feeling much more confident about their future. And this has been borne out by the latest Business Barometer report that's been released by Hitachi Capital Business Finance. Their report, where they've spoken to 1,300 small business owners, has revealed that 78% of them say that they are planning growth over the next 12 months. A staggeringly high figure, and good to see that business owners are feeling that confident. But where are their growth priorities? What specifically are they looking to do? Well, the report highlights 4 top key areas. First of all, the top priority is to increase sales income. Next up, they're looking to launch new products and services. Third priority, reduce their fixed costs. And the fourth priority is to build financial reserves. Now, no doubt you'll agree that over the last 12 months, many business owners have seen their financial reserves be depleted. So good to see that one of the priorities is to get cash back into the business. Thing is, of course, we don't know what's going to happen over the next 12 months. So if you do have financial reserves in the background, it means you're able to weather out any little blips that may come your way over the next year. Now, looking at growth generally, really good to see that 36% of business owners say they're already taking action on growth, and 53% of them say that in order to enact these growth plans, they are going to need more finance. Now, what are they going to be spending this money on if they do get it? Well, a number of key areas. First of all, they're going to be spending on hiring more people. Next up, they are going to be looking to launch those products and services which I mentioned earlier. Next up, they're also going to be trying to spend money in order to keep up with the competition. So good to see that businesses have got plans on what they'll spend their money on. But of course, where do they get it from? Well, here are a couple of ideas that you can use. If you're looking to buy in stock or even hire staff, then a short-term loan will be good. These are loans which are repayable over 12 months. So say if you are buying in stock, obviously as that stock sells, it matches that short-term nature of those short-term loans. And next up, you've got invoice finance. So if you are growing and you've got a bigger debtor book, well, you don't want to be caught out by having payment terms of 30, 60, 90 days, having to wait for that money to come in. You can access invoice finance. You've also got asset finance if you're looking to buy plant and equipment and machinery. A great way, that's HP and leasing, to spread the cost of acquisition of these items over a 3 to 5 year period. And lastly, of course, you've got the newly launched recovery loan scheme. Still early doors on that one, and signs are that the take-up is not that great at the moment. Probably both business and lenders holding back before they really push for that later on in the year. So there we are. Overall, great to see businesses planning ahead. And of course, you've got various sources of access to finance in order to help you grow your business. After the positive and upbeat opening to this week's Business Finance Bulletin, now some bad news. Taking a look at the latest red flag alert report from Begbies Traynor. And the report reveals that there are now 723,000 businesses who classify themselves as in significant financial distress. Now, the number on its own doesn't mean a lot. However, compare that first quarter figure to quarter 4 2020, the previous quarter. This has seen an increase of 15% of businesses who say they're now under financial pressure. However, this jump is even more stark when you compare it to the first quarter of 2020. We've seen an increase of 42% in the number of businesses saying they are under significant financial pressure. So it just shows that the kind of fallout of what's been going on over the last 12 months is now beginning to take its toll. Now, of course, I've mentioned in previous bulletins that the number of insolvencies is well down on what is expected in the normal economic cycle. That's partly because of the kind of government support that's been given to businesses. But this dam is eventually going to burst, and undoubtedly there's going to be more insolvencies later on in the year. This report from Begbies Traynor has also looked at county court judgments, CCJs. Now, in the first quarter of 2020, there were 23,325 CCJs lodged in the courts. However, in the first quarter of 2021, it stood at 9,377. So we can see a massive drop in the number of CCJs registered. So undoubtedly, once restrictions are lifted, we're going to see creditors going to be really pursuing much harder for money that's owed to them. Also winding up petitions as well. We've mentioned that. That's currently on hold. And the report highlights there's been a fall of 98% in the number of winding up petitions presented. So again, you see when all this pressure is going to be building up. So if you are a firm that kind of would classify yourself as being under financial pressure, don't forget, take the appropriate advice. Speak to your accountant, your business advisor, or even seek out a licensed insolvency practitioner who can help you kind of plan all the steps that you need to take in order to protect you and your business. As I covered in the first segment, many business owners are planning growth over the next 12 months. But one of the key things that can put the brakes onto your growth plan is late payment. Not having your invoices paid on time can hinder your growth plans because of lack of cash flow. Well, Dun and Bradstreet has taken a look at this topic and spoken to 753 small business owners about their experience on late payment. The survey found that 20% of invoices are paid after terms, and this can have a big knock-on effect in terms of your ability to grow. 51% of small business owners said that they rely on prompt payment in order to keep them solvent. It's a very high percentage and just shows the kind of thin ice that many business owners are skating on in terms of financial reserves. So what can you do? Well, the key thing, of course, here is when you're issuing invoices to make sure that your terms and conditions are very clear. Even at the contract stage, make sure you get it written into your contract what your terms are and set out what you will do in terms of late payment. Put your payment terms on your invoices and then have a very clear process in place for those businesses who are late in paying you. Don't forget, there is no shame at all in following up on payment which are due, especially if the terms are very clear up front. This is your money. It should be in your bank account, not your client's bank accounts. So have very clear terms and conditions, and also set out everything so all parties are well aware of the expectations you have when it comes to being paid on time. Well, that's it for another bulletin. I hope you enjoyed it. And if you did, please don't forget to give it a like, a share, and of course, subscribe to this channel. So that's it for this episode. Look forward to being with you next time. In the meantime, have a great, successful, profitable, and safe week.